This is a defining moment for Nvidia. Yes, there are many bullish technical signs indicating a possible recovery, but Nvidia is still in a delicate position, fundamentally speaking. So, could this be just a dead cat bounce before the next crash? Will Nvidia repeat the same pattern it did in 2008? Or is this the beginning of a wonderful bullish reversal structure? Well, let's pay attention to the most important key points on Nvidia in this video. Welcome to the Finance Hydra channel. My name is Nathan. Let's analyze Nvidia's price action. In the weekly chart, yes, we see a quite powerful bullish reversal structure, an inverse head and shoulders chart pattern in the weekly chart. What's the problem? Well, the problem is that this chart pattern was not triggered yet. Yes, it is looking quite good. Yes, we found a support level at the 61.8% Fibonacci's retracement down here, but Nvidia didn't trigger this inverse head and shoulders yet. In fact, the trend is still bearish. Nvidia is still doing lower highs, lower lows, and it is trading below this purple trend line, which connects the previous top levels since November 2021. So, yes, the trend is still clearly bearish, and Nvidia has yet to break its main resistances in order to reverse the trend. So, although we see these bullish structures over here, it is not over yet. Nvidia still could drop. In order to avoid a further drop, Nvidia has to break the 187. It has to trigger this inverse head and shoulders in order to avoid a sharper continuation of the bearish sentiment. If we analyze, in the weekly chart, still in the weekly chart, we see a crystal clear support level at 115. The 115 is a quite strong support level that dates back to September 2020. If Nvidia loses this support level, the situation will probably get ugly. Now, if we analyze the monthly chart, in the monthly chart, Nvidia is trading in a critical situation, extremely critical, because Nvidia, yes, we found our support level over here in the monthly chart as well, but right now Nvidia is doing a bearish structure under the 200 moving average. This moving average is from the daily chart. Okay, although we are analyzing the monthly chart, this moving average is from the daily chart, and we are doing a bearish structure under this moving average. We are doing a candlestick pattern called dark cloud cover candlestick pattern. Nvidia did this pattern only twice before 2023 over here. The last time it did a top sign under the 200 moving average was in 2019. This time over here, it didn't trigger any sharper pullback, so the situation was under control. Nvidia did a bullish harami candlestick pattern over here, and it reacted nicely. It engaged a bull trend over here, and okay, it just kept trending. The bull trend resumed. However, in 2008 over here, the situation was quite similar. In 2008, Nvidia dropped from the previous peak to the next bottom level 57%. It did a bearish candlestick pattern called bearish engulfing under the 200 moving average, and it kept dropping. Yes, it already dropped 57% over here. However, it dropped more. It dropped more, 85%. It dropped 85% from the previous top level to the next bottom level. So, although it dropped a lot already, it still can drop a little bit more. So, right now, if we analyze Nvidia's chart over here in the monthly chart, from the previous top level to the next bottom level, it dropped 68%. Okay, this is worse than 2008. However, we still could drop a little bit more. If Nvidia triggers this dark cloud cover candlestick pattern, I do believe Nvidia could easily lose the 115, the support level over here in the monthly chart, and in this scenario, it is going to seek the next technical support, which is around $72. The $72 was a previous top level in 2018. Now, if we analyze Nvidia's fundamentals over here, let's take a look at fundamentals. This is simply Wall Street, by the way. The link to my affiliate link is in the description of this video. Now, Nvidia has a higher growth potential with an excellent balance sheet. It is still a quite good company to invest. Fundamentally speaking, it has an amazing financial health as well. Nvidia, it is not going to zero because look at this, it has an amazing debt to equity ratio. Although it is rising, it is still quite good. It still has more cash than debt. So Nvidia is still quite resilient if you ask me. However, its valuation is a little bit problematic. Its price to earnings ratio is 61.4. 61.4, it is way above the fair price to earnings ratio according to Simply Wall Street's metrics. Also according to Simply Wall Street, Nvidia is overvalued. Although it dropped a lot, it is still overvalued. Its fair value should be around $103. According to Simply Wall Street, and they use the discounted cash flow method. You can analyze Simply Wall Street's valuation model over here, okay? Just check my affiliate link in the description of this video. Now, back to the charts. Oh, by the way, check my website, join the top 5% traders. We went up nearly more than 6% last week. So yes, we are doing quite good. My portfolio has a public performance. Check the link in the description of this video to my website. Join the top 5% of traders. Now, Nvidia, yes, it is doing a quite problematic bearish structure just under the 200 moving average over here. And if it drops to the $100 again, which is its fair valuation according to the Simply Wall Street, it could easily drop more, 34%. Technically speaking, it could drop more, 50%, to retest the $72 down here, which is the next technical support level. Back to 2008 over here, after the breakout, after triggering this bearish pivot point, Nvidia did a bearish engulfing. The bearish engulfing was triggered and then it dropped more, 70%. So this scenario, Nvidia at $72 is quite plausible. This wouldn't be a surprise to me, at least at all, because if history repeats what it did in 2008, if this crash is not over yet, Nvidia could easily retest lower levels. It all depends on how it is going to react from here. If it triggers this dark cloud cover candlestick pattern, then okay, then I believe Nvidia, it is going to at the same time frustrate this inverse head and shoulders chart pattern in the weekly chart, completely ruining any bullish reversal perspective Nvidia could possibly have over here and re-engage the bearish sentiment to lower levels. In this case, I would bet $72. Alright, well, let's keep your eyes open at these key points. Are you still watching this video and you are not my subscriber yet? Consider subscribing to keep in touch with my daily analysis, daily insights, and click on the like button to support me. After all, you are still watching this video, am I right? So you probably liked the content, so click on the like button to support me. Let's pay attention to the 187. This is the trigger point of this inverse head and shoulders. This is what it takes for Nvidia to avoid a sharper bearish continuation over here, and to the 61.8% Fibonacci's retracement. If Nvidia loses the 61.8% Fibonacci's retracement, it is going to, at the same time, trigger this dark cloud cover candlestick pattern in the monthly chart, indicating that yes, we have a sharper correction ahead. Alright, thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.